This piece of plastic is the most powerful financial tool you will ever own. Used correctly, it can fly you around the world for free, protect your purchases, and build the trust you need to buy a home. Credit cards are one of the most misunderstood financial tools. Some people think credit cards are dangerous. Others think they're free money. The truth is, credit cards are neither good nor bad, they are tools. The difference is knowledge and discipline. Used incorrectly, it is a financial chainsaw that can ruin your life for a decade. The difference between those two outcomes isn't luck. It isn't income. It's simply understanding the rules of the game. Today, we are stripping away the confusion. We aren't just going to tell you, pay your bills. We are going to explain exactly how credit cards work, the secret vocabulary banks use to trick you, and the specific strategy you need to profit from them without paying a dime in interest. Whether you just turned 18 or you're 40 and finally ready to take control, this is your masterclass. Let's dive in. Part 1. How it actually works, debit versus credit. To understand credit, you must unlearn how you use a debit card. When you swipe a debit card, you are opening a digital tunnel directly into your checking account. The money leaves immediately. If the vault is empty, the transaction fails. A credit card is completely different. When you swipe a credit card, you are not spending your money. You are spending the bank's money. The bank pays the store for you, and you promise to pay the bank back later. Think of it like a bar tab. For about 30 days, your billing cycle, the bank keeps a running list of everything you bought. They don't ask for the money instantly. They just add it to your tab. At the end of the month, they send you the bill. This is your statement balance. This is the most critical number in your financial life. You now have a choice. You can pay the entire tab off right now, and the bank will charge you $0 for the service. Free money for 30 days. Or, you can pay just a little bit of it. If you don't pay the full tab, that is when the monster wakes up. The bank will start charging you interest, usually around 20% to 25%. This is how they make billions. Your goal is to never ever let the monster wake up. Part 2. The vocabulary of the trap, terms you need to know. To win this game, you need to speak the language. Banks use specific terms to confuse you. Let's decode the big three. First, APR. APR stands for annual percentage rate. It's the interest rate you pay if, and only if, you carry a balance. If you pay your bill in full every month, the APR is irrelevant. It could be 100%, and it wouldn't matter because you never pay it. Second, the minimum payment. This is the biggest trap in the industry. The bank will tell you, you owe $1,000, but you only have to pay $25 today. It sounds nice, right? Wrong. The minimum payment is calculated to cover mostly interest and almost none of your actual debt. If you only pay the minimums, a $2,000 purchase could take you over 10 years to pay off. Never pay just the minimum. Third, credit limit. This is the maximum amount the bank is willing to lend you. If your limit is $5,000, that is your ceiling. But, and this is huge, you should never actually touch that ceiling. Using 100% of your limit makes you look desperate to lenders. We call this utilization. For the best credit score, you want to keep your usage below 30% of your limit. So on a $5,000 card, try not to have a balance higher than $1,500 when the statement closes. Part 3. Why use them? The rewards and protection. At this point, you might be thinking, this sounds risky. Why not just stick to debit? The answer is threefold: security, rewards, and reputation. Reason 1. Security. If a hacker steals your debit card info, they drain your real money. You might not can't pay rent while you fight the bank to get it back. If they steal your credit card, they steal the bank's money. You just report it as fraud, you pay nothing, and your real cash is safe. Reason 2. Rewards. Every time you swipe a debit card, you get nothing. When you swipe a good credit card, the bank pays you. Whether it's 2% cashback or airline miles, you are effectively getting a discount on everything you buy simply for using a different piece of plastic. Reason 3. Reputation. We live in a credit-based society. You cannot rent a nice apartment, get a good mortgage rate, or sometimes even get a job without a credit history. Using a credit card responsibly is the fastest way to build that history. Part 4. The Golden Strategy, Step by Step. So, how do you start? Here is your step-by-step strategy for your very first card. Step 1. Apply for a starter card with no annual fee. If you have no credit, look for a secured card where you put down a deposit or a student card. Avoid premium cards with high fees. You aren't ready for those yet. Step 2. Put one small, recurring monthly bill on the card. Think Netflix or Spotify. Set it and forget it. You don't need to use the card for everything yet. Step 3. This is non-negotiable. Log into your banking app and turn on autopay for the full statement balance. Not the minimum payment. The full balance. This ensures you never miss a payment and never pay interest. Step 4. Wait. Every 6 months, ask for a credit limit increase. As your limit goes up and your spending stays the same, your score will climb higher and higher. Credit cards are not free money. They are a tool for managing cash flow and building trust. If you treat your credit card exactly like a debit card, only spending money you actually have in the bank right now, you will reap all the rewards without any of the danger. Don't fear the plastic. Respect it. Master the rules we talked about today, and you'll find that the financial world opens doors for you that stay locked for everyone else. If this video helped you understand credit cards better, consider liking the video and subscribing for more financial education. Thanks for watching.